Singapore's Sovereign Wealth Fund, GIC, says China continues to offer bottom-up opportunities despite its structural slowdown and ongoing property sector stress. Group Chief Investment Officer Bryan spoke with CNA's Elizabeth Neo on the sidelines of the Milken Institute Asia Summit. He explains the transition the world's number 2 economy is going through.
If we think about the transition that the Chinese economy is undergoing now, it's quite a major transition where China's moving from the previous growth model that was property investments-led, that was local government infrastructure investment-led, to a future growth model which is really going to be marked by growth in advanced manufacturing, innovation, as well as consumption. So when we think about this transition, it's going to be a multi-year process. There is also a major deleveraging process, as we know, going on in the property sector. So we're watching how these forces interact and how the transition proceeds. That's from a top-down perspective. But we also look at opportunities from a bottom-up perspective. And when we look at China opportunities in a bottom-up lens, we actually do see innovative companies. We have been significant participants as cornerstone or anchor investors in some of the recent 8-share IPOs this year. And we've seen some of these leading companies list on the 8-share market, and that's giving us an opportunity to participate in their long-term growth as well.
Okay, and we also at the same time seeing global capital increasingly rotate towards India and Southeast Asia. And so looking at other parts of this region aside from China, how is GIC balancing its long-term exposure to China versus the rest of emerging Asia?
So when we look at the pipeline of opportunities in Asia Pacific as a whole, I would say we're seeing a healthy pipeline of deal opportunities in the private markets, as well as opportunities in the public markets in 2 particular areas. India's one, and Japan's the other. So if I zoom in on India, we're seeing significant growth opportunities there arising from infrastructure build. That's one space where there has been underinvestments over the years, and with India's growth and economic model, there is a need for build-out in infrastructure. So that's one key area of opportunity that we see and have been working on. The financialization of the economy, the digitalization of the economy, these are also multi-year big trends that India is undergoing, and we're still at the early stage of that. So these are major trends that we see in India that will offer opportunities to investors like the GIC. With Japan, that's also been an interesting area and a rich area of opportunity for us. We've seen Japan emerge from 2 to 3 decades of deflation, and we believe that the new Japan that we see today, with a healthy level of inflation, is a sustainable one. And what the 2 to 3 decades of deflation has done was create many pockets of capital misallocation and inefficiencies. And coming out of that, we now see policymakers and regulators in Japan pushing really hard on corporate governance reforms, on getting companies to increase their return on equity, getting companies to increase their balance sheet efficiency.